Okay, champs, welcome back to Libertas Trading and welcome to the event preview for the Aussie Jobs data coming out on Thursday, the 11th of December 2025. So I mentioned in my week ahead preview that I wasn't too excited about this one, and that hasn't changed, to be fair. Same rules apply for Aussie Jobs. Recently, they hasn't been reacting the best. It's just been good for short-term scalps, apart from we've had that really, those massive deviations that we look for. But we did get some comments from RBA's Bullock, who I quite like. She's pretty straightforward. She's pretty Aussie. She mentioned a few interesting things that we need to be mindful of. So firstly, she said, need to be cautious of monthly CPI series. Obviously, they only had 1 month out. So I think the next one is out on the 9th of January. From memory, I could be wrong on that, but I'm pretty sure that's when the next one's out. You know, that will be heavily watched, but the important one we're looking at will be the one on the 29th, which is the quarterly print, which I think is a week before the next RBA decision. So that will be massive. That quarterly inflation print will be the biggest one to watch. But she did also say inflation and jobs data will be important for the February meeting. So jobs data is what we're trading today. So, she's obviously watching this. This isn't the last jobs print before that meeting. There'll be another one in January. So this won't be the biggest print of all time. This won't be the most well-watched Aussie jobs print of all time. But, it does carry a bit more weight after those comments. So we'll quickly look at the trade scenario sheet. So again, we are looking for these moves on aggregate. So if the unemployment rate comes in ridiculous like the Canadian did last week, we won't need as much of a miss on the employment. And conversely, if unemployment rate comes in flat, but this full-time number and the unemployment number comes in absolutely horrendous, that'll be good for a trade as well. So again, these numbers are just on aggregate. So for the employment number for dovish reaction, we're looking for anything negative, which would be at least 10k below the minimum and show job losses on the month. So any negative number should be good enough for a scalp. And then for a hawkish reaction, anything above 43k, it would show higher than previous job creation, a print above the max, and also the highest since April. And then for full-time employment, anything negative should be enough if we see the right unemployment rate. Otherwise, you'd want to be looking for more in an ideal scenario. So, if we get like a minus 2k, for example, and the unemployment rate comes in flat, I won't be trading that. If we get minus 2k and the unemployment rate comes in at 4.6, I'll be trading that. And if the unemployment rate comes in at 4.5, I'd be looking for maybe minus 20k. And if it comes in at 4.4, which is in line, I'd be looking for something like minus 40k to trade, if that makes any sense. And then for a hawkish reaction, after last month's average reaction to a 55k beat in the full time, I'd want to see above 43k this month, with a lot more if that unemployment rate comes in flat. And then for the unemployment rate, we'll be looking at 4.6 or higher, which would be back at November 2021 levels, which would be really bad news for the RBA, and could stop them hiking. There's 55 basis points of hikes priced for next year. And then for a hawkish reaction, I'd be looking at 4.2% or lower, which would be back at the lowest level since May, and a very positive move in the right direction. Again, if it comes in at 4.3, I would trade that, but I'd want to see full-time printing even higher, as we printed at 4.3 last month. Of course, for a dovish reaction, we expect Aussie dollar lower, and for a hawkish reaction, Aussie dollar higher. So for the medium-term plays, for a dovish reaction, I'd look at Aussie Kiwi shorts. That would be my preferred trade out of a solid miss tonight. I think the markets have gotten a bit ahead of themselves with 2 hikes fully priced in now for the RBA next year. And it feels like with current market pricing for the RBNZ and after last Wednesday's rate decision, that the Kiwi would be best placed to take advantage of that potential repricing for the RBA. So after 325 basis points of cuts from the RBNZ, the New Zealand economy is expected to benefit from some decent tailwinds after what's been a difficult few years for growth. Aussie Kiwi is sitting right on that September 2022 high, and after a break lower and retest, we're at amazing levels to look for shorts. So we'll quickly look at the Aussie Kiwi chart. So you see we've had this really important level here. We broke out, retested, pushed higher, broke back down, and we're now retesting that level. We've got a bit of a shooting star candle here, that 115 level. And then if we zoom out, we'll see the significance of this number. We go all the way back to 2022, and that is the level we are at. So this could be a really nice level to find some shorts from here. For a hawkish reaction, you could look at some pound Aussie shorts. You guessed it, I want to sell the pound. So these shorts continue to look attractive, especially if we manage to break below that tough $2 level on the back of this print. Monetary policy divergence should continue to pressure the pair. And even though I think markets are getting a bit too excited about hikes for the RBA, where a lot lies down to that January 28 quarterly CPI print, a really solid labour print tonight should keep the Aussie bulls excited. Interest rate differentials show further downside potential too. And for the pound, the same negative drivers apply. Poor growth, inflation showing signs of softening, an increasingly weak labour market and a central bank halfway through a cutting cycle. Also with pound Aussie, we are relatively shielded from swings in risk. And with the FOMC coming up, that's an important consideration. So coming out of the FOMC tonight, even going into the Aussie jobs data, we can get some wild swings in prices. So especially because it's, that Christmas trading, just really important to sort of look for risk neutral pairs, in my opinion. So we'll quickly check out the pound Aussie chart. So here we are on a daily. We've got this $2 psychological level here, which has shown a bit of a triple bottom. If we break below that, we could see some solid downside. And then just quickly looking at yield differentials a second. If you just give me a sec to pull it up, we can see the yield differentials look quite favorable as well. There we go. So yeah, yield differentials point to downside as well. This is just a 10-year, but the 2 years exactly the same. And then for scalping plays, for any scalp, I'll only be looking to trade the Aussie dollar, the euro Aussie, or the Aussie Kiwi, going for what's strongest or weakest before the release, and also favouring a sell over a buy. If feasible, I'll stick to the Aussie Kiwi, so that one has reacted best as of late. For the Aussie dollar, I'll be looking at a 13 pip target, for the Aussie Kiwi an 18 pip target, and for the euro Aussie a 28 pip target. So 7 out of the last 8 tradable print, it would have been best to enter the trade at 5 seconds. So once properly digesting the data, I'll be getting in sharpish, but of course always be wary of your spreads and risk, especially at this time of night and especially this time of year. So it's even more important tonight, to check that spread. If your spread after 5 seconds is horrendous, it could be best to wait for a little bit longer. We'll quickly check out last month's print just for some context. So pretty nice print. The employment printed, pretty close to the high. Full-time employment at 55k was massive, and that unemployment rate lower at 4.3 was nice as well. So, not the best print of all time, but definitely worth a scalp on this one. You can see price moved higher and lasted for about 15 minutes. We'll check out the 5-second chart to see the short-term reaction. And there we go. It shows it was best to enter straight away, and, price moved perfectly on this one. So it would have been well worth a scalp. Just quickly looking at last year's print, so you guys can sort of see how the Aussie jobs data reacted this same time last year. I believe this was a week before the December FOMC. So, you're probably going to find worse conditions tonight than we did for this print, because traders do tend to go home or do tend to log off for the year after that December FOMC. But you can see here, unemployment rate, came in super low, which was amazing for the Aussie dollar. That full-time employment at 53k was really good as well. Okay, the employment wasn't amazing, but that full-time at print is the important number. And you can see here, price didn't react that great. So would be a little more cautious on this one. But yeah, we'll check out the 5-second chart quickly. And here we go, the 5-second chart. Quite a nice entry, to be fair. Didn't spike too far. So you could have made money on this one on the right entry level. Again, it would have been worth getting in straight away. So could be nice tonight, but yeah, guys, just go careful. Check out your spreads, check out your entry levels, and keep risk nice and tight. So that's it for this week's preview, or this month's Aussie Jobs preview. Any questions, give me a shout. And of course, as always, good luck.